me start with something real. Most people don't have a money problem. They have a structure problem. They make money. They save some money. They even invest a little money, but they never seem to get ahead. Why, you ask? Because money without structure leaks. Money without a plan gets spent. Money without direction disappears. And in 2026, this matters more than ever. Before I talk about how to allocate your money, I need to say this first. If you want maximum growth, you must have two things in place. First, a strong personal credit profile. That means credit scores above 681 minimum. Second, if you're a business owner, you must have a properly structured business. Why, you ask? Because good credit gives you access. Good structure gives you leverage. Without those two things, you are using cash only. And cash is the slowest way to grow. When your credit is right, money becomes cheaper. When your business is structured right, money becomes scalable. So as you listen to this video, understand this. The allocation I'm about to share works best when your credit and structure are working with you, not against you. Now, before I go any further, I want you to like this video. Do it now, please. And subscribe to this great channel. Now, I want to get into this, the 2026 money allocation overview. In 2026, money must do more than sit. It must work, grow, and protect you at the same time. Here is the core allocation model for maximum growth. 35% into long-term market investments, 20% into real estate and real assets, 20% into business and income engines, 15% into growth technology and AI, and 10% into personal development and protection. This model creates balance, it creates growth, and it keeps you from being exposed in any one area. Now let's break this down step by step. Part 1, 35% long-term market growth. This is your foundation money. This is not fast money. This is steady money. This part of your allocation is about letting time work for you. In 2026, the market will still move up and down. That is normal. But history shows one thing clearly. People who stay invested long-term usually win. This 35% should be placed into broad market investments. That means things like total market funds, large company funds, dividend-producing investments, ETFs. This is where you want to do it. The goal here is simple. You want your money to grow while you sleep. You don't need to trade daily. You don't need to guess the market. You just need to stay consistent. And this is a word that it has taken me a long time to master. But once you master consistency, everything works. If you had $10,000 to allocate, this means $3,500 goes here. This money is not touched. It is not played with. It is allowed to compound. This is the slow engine that builds big results. Part 2, 20% real estate and real assets. This is where wealth starts to feel real. Real estate does 3 powerful things. It produces income, it grows in value, it offers protection against inflation. In 2026, owning real assets matters more than ever. This does not mean everyone must buy a house tomorrow. Real estate investing can look like rental properties, small multi-unit buildings, real estate funds, shared ownership opportunities. The key idea, though, is ownership. You want something real, something tangible, something that pays you or grows while you hold it. So if you had $10,000, this means $2,000 goes into real assets. That might be saved toward a down payment. It might be placed into a real estate fund. It might support a property you already own. This part of your allocation helps stabilize the future. Part 3, 20% business and income engines. This is where growth accelerates. Owning or building income engines is one of the fastest ways to increase wealth. This includes your own business, side income streams, digital products, service businesses. Here's where structure matters. If you're a business owner, your business must be ready, properly formed, bank ready, credit ready. When your business is structured right, money flows easier. This 20% is used to build systems, improve operations, increase visibility, create repeat income. If you had $10,000, this means $2,000 goes into business growth. This is not spending, this is investment. This is money that should come back multiplied over and over. Part 4, 15% technology and AI growth. 2026 is not the future, it's the present. Technology and AI are already changing how money moves. This allocation is about positioning, not guessing. This includes technology investments, automation tools, AI-powered systems, software that saves time or creates income. This is not about chasing trends. It's about understanding where the world is going. If you are a business owner, this might mean automating customer follow-up, using systems to manage finances, using AI to reduce labor costs. If you're an investor, this might include technology-focused investments. If you had $10,000, this means $1,500 goes here. This keeps you current, it keeps you competitive, it keeps you from being left behind. And part 5, 10% personal development and protection. This is the most ignored category, and it is the most important one. Your mind is your greatest asset. Your habits decide your future. This category includes learning, coaching, skill building, mental clarity, financial protection. This could be education, mentorship, health investments, legal and financial protection. When you grow, your income grows. If you had $10,000, this means $1,000 goes into you, not entertainment, not distractions, growth. This investment pays you forever. Now, put it all together. I'll give you a real example. Let's bring this to life. You had $10,000 to allocate in 2026. Here's the breakdown. $3,500 into long-term market growth, $2,000 into real estate and real assets, $2,000 into business income engines, $1,500 into technology and AI, and $1,000 into personal development and protection. Now imagine doing this every year. This is how wealth is built. Not fast, not flashy, but structured, intentional, and consistent. Money grows best when it has direction. This allocation works because it spreads risk, it multiplies opportunity, it protects your downside, and most importantly, it forces you to think like an owner. In 2026, people who win will not be the ones who make the most money. They'll be the ones who allocate it best. If your credit is strong, if your business is structured, if your money has a plan, growth becomes predictable, and that is the real secret. If this helped you take action, review your credit, review your structure, review where your money is going now, and remember, money follows clarity. I look forward to connecting with you, so subscribe, like, and leave me a comment. Let's connect. You be blessed.